All right. Well, thank you, Mark, for the introduction. My name is Nicholas Tiska. I am an attorney here in Chicago. I work at a law firm, Handler Thayer. We work predominantly in the private client space, but I really grew up as a real estate lawyer. And I've been involved with a lot of different bar associations, Chicago Bar Association, DuPage County Bar Association, our state Illinois Real Estate Bar Association for real estate attorneys. Um, and I will say this, of all the work that I do, it still remains very meaningful to me when I get to help somebody buy or sell their home. And you say, well, if you work on big transactions and why is this so important? Well, if you think about some of the memories that you'll have with your family growing up, even to this day, like the memories I have of my parents, one of whom is, no longer with me, they all happened in our home, right? So where you live is so meaningful. And so to help people, get to, find a place where they can raise their own families and feel safe and secure is still something that I enjoy quite a bit. So with that said, in addition to kind of working with various bar associations, I've been very active in drafting forms and contracts. So I come to this presentation as somebody who literally writes contracts, and we'll talk in a moment about the various forms that exist. And I've had the privilege of participating in the drafting of both forms. And I guess that's the context from which I come to you. Know that I am also a licensed real estate managing broker in Illinois, so I do get the realtor's perspective. I'm also a title agent for a lot of the major underwriters. So as we go through this process, and we talk a little bit more in a moment, we'll talk about title insurance as being something that occurs. And I've got familiarity with that as well. So I do just about everything on the real estate side except underwrite mortgages. But I certainly can share with you some helpful tips about how to go about getting a mortgage if you're the buyer, and things to look at when you're considering various financing options. So with that said, let's get started. Oh, and there's one other thing that I'd like to mention just before we get going here is I would like to just take a moment to go through the programs that this partnership is going to offer during this bar year. So this Law at the Library series is, in my opinion, sort of an access to justice, access to free legal information. I think it's a great public service, and so it was a huge honor to get to come here today and have these conversations. But some of the programs throughout the year have already passed us now. But I did want to just highlight that still coming on April 16th is the Entrepreneurship for the Creative Arts, Legal and Business Issues for Artists. That's fascinating. I will tune in myself. And then on May 21st, we're also going to have a program that's going to focus on some of the LGBTQIA issues going on right now, and obviously those are significant due to some recent political changes. And then on June 18th, Law at the Library will come back with a program on wills, trusts, and estate planning. When we get to the end of this presentation, the sort of after you've bought your home component of this, I'm going to talk about the need for estate planning and why that's so important. But with that said, let's get going. So if you were to think of the real estate timeline, I want to walk through the various stages of the deal and sort of how things go. Part one is probably hiring a broker, right? Part two is listing a house for sale. Part three, the showings and the open houses. Part four is receiving and negotiating offers. Part five is accepting a contract. Then you move on to an attorney review and inspection period. Then you move on to, or contemporaneous to that, you work on financing if you're not a cash purchaser. And then you move on to closing. Those are sort of the big parts to the real estate transaction as it goes. And we'll talk a little bit about the highlights of each of these as we go along, and know obviously that some of these things apply to sellers, some of them apply to buyers. So, for example, a seller isn't obtaining financing early on in the process, but the seller might be making repairs to the home before it's even listed. So these things kind of run concurrently. They run, in tandem between a buyer and a seller who have never even met because they're not going to come together until later in the process. But they are important to note nonetheless. So I guess even before you talk about listing a house, I thought it might be worth just briefly talking about the concept of timing and picking the right moment to either be a buyer and or to be a seller, right? In both cases, you probably need to be able to devote time, money, and energy into the process. And it probably needs to happen in a moment where your own affairs are in order, your own house, so to speak, is in order because you have either prepared your own finances for a transaction or ready to a property, for example, to bring it to market. It's also important to understand the market's moment above and beyond what's going on in your own life. And that's primarily because real estate seasons are very cyclical. More people, no surprise, move during warm weather months than in the cold, right? Nobody wants to be lugging couches through the snow during a Chicago winter. But there are good things and bad things about buying in the peak market times. One of which is, if you're a buyer, that there's more selection. On the other hand, prices might be higher because a seller knows that there are more people in the marketplace at that moment, and therefore believe that they're going to extract a higher price. So it's important to just understand that, you know, you don't want to be on the market at the wrong time, especially on the seller side. I have an anecdotal story of a home that's across the street from where I live, where, long story made short, I had expressed an interest in buying this house, and the seller came back to me with this big number that I thought was way too high. And by the way, this was in October of a given year. And I said, no, that's sorry, that's just too expensive, not in our budget. Listed the house in October after we decided we didn't want to buy it because he knew that we might have an interest first. Price cut, price cut, price cut, price cut. Long story made short, the price that he offered me turned out to be $550,000 more than what he ultimately got for that property when he sold it in the following springtime, which was in April. Truth is, he probably would have gotten closer to his asking price had he just not had his house on the market and let it sit empty till spring. But as a result, he was on the market at a high price during a time when no one was looking, kept producing, thinking that it was the price that was affecting it. And really, it was all about the timing. So pick your time wisely. If you're a seller, you want to prepare that house for sale, right? And that's happening even long before you necessarily even engage a broker. The reality is that no matter how perfect you think your house is, it's probably not ready to be sold in its current condition. So that could mean that you need to declutter the house, remove personal possessions, remove knickknacks. What you're trying to do is create some scenario where a buyer can walk in and see themselves living there and that being their home rather than it being, your home that they're just a visitor in. Other things, right? Take this time sort of before you go to the market to do things like paint the room if the walls are nicked up or dinged, and make necessary repairs that, yes, would get uncovered during a home inspection, but more importantly, a buyer would see if they're coming to an open house or they're coming to a showing in your house. So I cannot stress enough how important it is in the lifespan of a real estate transaction to not believe that the process begins the day you call a realtor. I would suggest that in an ideal world, you would start to prepare your home before you've ever even consulted with an agent. And look, you could eventually move on to the process where you engage an agent, and an agent might give you other feedback of other things that you should be doing. But I would say, again, get your affairs in order, get your house together, and that'll make the process go smoother. While the seller's preparing their house for sale, right, on the listing side, um, again, possibly even before a broker is involved, a buyer should begin shopping for a mortgage. And that might seem a little bit counterintuitive. You might think, hey, the first thing I'm going to do is I'm going to find myself a real estate broker, and that's how we're going to begin this process. But what I would suggest is that once you engage with an agent is likely to want to start showing you houses and find that perfect place for you to go. And it's not always the case that a buyer's ready to obtain financing. So what I would say is, engage a loan officer early. You are welcome. In fact, I would recommend that you start with the bank where you do your regular banking. It's certainly easy enough to walk into Chase or Bank of America or Wintrust and have those conversations. But where you do your banking may not be able to offer you the best rates. And part of that's just a function of cash flow and how much money is on the balance sheet at a given time and how much money is available for lending. So I would suggest that you at least look to two lenders. Chicago is home to lots of banks and then also national lenders like the former Guaranteed Rate, now Rate. So I think it's always a good idea to kind of shop around, compare pricing. But in that process and in engaging with a loan officer, I think it's also likely that they may come up with some ideas for you about your own financial health, where you sit in the marketplace right now. If you have a 739 credit, a 739 credit may not get you the same rate as a 741 credit. So it could be as simple as, making a little bit more of a payment on your next credit card just to bring down that balance. And so, if there's other issues, right? If there's a delinquency, if there is a late payment, if there's whatever that maybe was due to no fault of your own, it gives you time to dispute that and start to think through how you can fix any credit problems. It's also a good idea to have some sense of exactly how much money you're going to need to buy that new home. And so in some cases, maybe you don't have the reserves that are necessary, or maybe you don't understand the totality of the expense involved with the purchase. And then that conversation early on with a lender can sort of help guide you on the path. It's also a great opportunity to explore grant programs, especially if you're a first-time home buyer. The Illinois Housing and Development Authority has a number of programs that help assist. And then, if you're a first responder, for example, if you're a police officer or a firefighter or a paramedic, the city has specific programs that are designed to help put folks in certain neighborhoods. And, depending upon where those are, you can see huge, huge incentives where you're given money to buy. So those are great resources. I don't know if I'm supposed to promote any given person, but there's a lender at Wintrust. Guy's name is Jason Akala. Jason does a lot of work with first-time home buyers, and I think has historically been the largest IDA grant-making lender in Illinois, for a decade. And I think he's a great resource, particularly if you think you might qualify for something like that. Okay, so you're preparing your finances. If you're a buyer, you're talking to a loan officer. If you're a buyer, if you're the seller, you are engaged in getting your house ready to sell. At some point in time, you're going to need to consider hiring a broker. I would suggest to you that on the listing side, it's extremely difficult to sell your home unless you already know somebody that wants to buy your home, or there's a neighbor or a family member. I would suggest that it's hard to go that route alone. And the best way to get exposure in the multiple listing service and all of the various websites is probably to engage a broker. And yes, a broker on the sell side is going to charge 2-3% to get your home sold. I think that's sort of a typical amount that you might expect. But I think it, is likely to lead to a good outcome for you as a seller. They can then also manage the process for you. It detaches you from direct communication with a prospective buyer or the buyer's agent. So that would be my recommendation there. On the buy side, the way that things have recently gone with the National Association of Realtors settlements, it's theoretically a little bit more possible to try to go it on your own. The system doesn't necessarily bake in a larger commission as it once did, with the expectation that both sides would have a broker. But I do think that you'll find that it may be easier to engage with a broker who knows areas, familiar, can tell you when you're on a certain street what school your kids are going to go to as a result. That is all helpful. And at the end of the day, right, I do think a broker's track record and how much volume and how many houses they sell, that might be indicative that they know how to do a deal. But if you are feeling rushed or pressured to do a deal because somebody just counts you as being, one deal that they need to sell $10 million of real estate this year, that may not be the best fit for you, depending upon, your own personality. So I would just suggest trying to get to know any agent you're going to work with, whether it's on the sales side or the buy side. I think the buy side, it's perhaps even more important because, it's possible that you could see 5, 10, 20 homes with an agent, and you're going to get to know those people because you don't usually see 5, 10, or 20 homes in one day. Practically, the way the process often works is that unfolds over the course of weeks or months. So you're going to run into that person quite a bit during the process, and I think it's important that you like them. All right, when it comes time to ultimately write a contract, there are 2 forms in our marketplace, or 2 sets of forms, I would say. And the way that you're going to know them is really based upon the length of the forms. So in Chicago, one group that puts out a form is the Chicago Association of Realtors themselves. Now, in fairness, I used to participate in their Forms and Contracts Committee, although the last iteration of the forms that I was involved with, I believe, were the forms that came out in 2017. They now have much more current forms that have been revised. And frankly, a lot of the terms that are in the Chicago Association of Realtors forms now have been borrowed from the multi-board form. And the multi-board form is something that I'm extremely proud of personally. While I did participate in the drafting of the CAR forms many years ago, I'm still actively involved with the drafting of the multi-board residential contract. So just briefly, I want to talk about who writes the form, and then I want to talk about why I tend to prefer the multi-board, with the caveat that you should know something that can happen under the multi-board. I know that that's cryptic, so let's get into it. Multi-board, 14 pages. Chicago Association of Realtors form, 4 pages. Chicago Association of Realtors form, written predominantly by members of the Chicago Association of Realtors. I believe they have one lawyer or practicing lawyer on their drafting committee now. It's a lawyer by the name of Rich Magnoni. Super nice guy, super knowledgeable. But at the center of that contract, I think, is the broker's perspective. The multi-board is a little bit different. So the multi-board is a joint effort between realtors and lawyers. So about half the folks that write that form, and there's about 25 of us, half of us are lawyers, half of us are brokers. And I think the nice thing about the multi-board is the cooperation that is fostered amongst all the participants. So you've got people from various bar associations, realtor associations. Some are in the city of Chicago. Some are outside. Some are in the far suburbs. Some are in the near suburbs. But collectively, we're coming together. We're trying to come up with a contract that we think is fair to both buyers and sellers. And in my personal opinion, this contract does a great job of it. Um, this form has gone through a number of iterations, the most recent being the 8.0 version, which is what's live and on the street now. That was released on February 1st. And I think has some much needed improvements over prior versions. So, if it's the spring of 2025 when you're watching this video and you're in the market for a home, your options are the Chicago Association of Realtors forms or the Multi-Board 8.0. One of the things that I love about the multi-board is that I don't think it sort of traps buyers into a deal. So the contract does have some provisions under both the attorney review and the inspection contingencies, which allow for a buyer really to just change their mind, right? So if you're a buyer and you just decide 2 days after you've got a little bit of buyer's remorse, this contract does allow you to get out of it, and really for no reason. And similarly with the inspection, if you do a home inspection and you come up with 23 things that need to be repaired, under the car contract, under the realtor's form, you really are sort of obligated to negotiate those repair items. And it doesn't give you the option of just throwing up your hands and saying, you know what? I knew no house is ever perfect. I thought there'd be a few small things, but the 23 things that my home inspection just found, it's collectively just too much. I don't want to proceed. And the multi-board gives you that option. I know from a broker's perspective that gives people outs. And, I've heard brokers say, sometimes that, you want to hold buyers and sellers to be accountable. But I got to tell you, right, in my practice, when somebody comes to me and says, I just don't want to buy the house, I usually don't even send them a legal bill for that, because I know that people's circumstances change. And, I don't want somebody to buy a house because they feel obligated or pressured to. Hopefully, they want to do the deal. Now, there are limits to this, right? You typically have 5 days um, under either form to do an inspection or to do your attorney review and do some due diligence. At some point, this does become binding on you, but I do think that the multi-board is more flexible. Now, what's the drawback, right? The buyer's not trapped in the contract, but the flip side is just like the buyer can get out of the multi-board, so too can the seller. So that's a consideration, right? If it's a really hot market and you're worried that while your offer is the strongest or going to be the strongest today, but you're not sure if it'll still be the strongest in 3 days, that might be the reason that you would say, you know what, I'm willing to really commit myself as a buyer under the car form, which is less friendly to me, but also contained in it is that more friendly provision of the seller not just having a right to cancel for no reason. So, the form you pick ultimately does make a difference. But what I would suggest is that no time has there ever been more similarities, I think, than in 2025 between both the car forms and the multi-board. All right, so you've picked a form contract. Now it's time to make an offer. I guess just a couple thoughts or tips on what you need to do to make your offer strong. I think if you're the buyer and you know information about the seller, like that they want to stay in their home until your kids are out of school in late spring or early summer, maybe take that into account. Obviously cash offers are going to generally be preferred over financed deals, not necessarily because the seller gets a whole lot more from a cash offer. In fact, there's actually a cost to a seller for accepting a cash deal because then they're obligated to split a closing fee that's paid to the title company to get the deal done. But with financing typically comes a contingency. So if I am a seller and I see somebody's coming in with cash, I don't have to worry about the credit worthiness of a buyer and whether or not the payment is going to ultimately be too high based upon a buyer's circumstances. So know that cash, I think, still does really remain king. Um, when you write your offer, you'll also have to make some decisions about what your expectations are. Are you going to waive your right to inspections? Are you going to do inspections? If you're going to do inspections, are those inspections going to lead to you being able to say, yes, I want to buy the house, no, I don't? Or is it the type of inspection contingency which is going to allow you to make requests upon the seller and then in good faith try to negotiate those out? Obviously, if I'm a seller, what do I want? I want a buyer who comes in that says, I'm going to take the house exactly the way it is. And even better would be, and by the way, I won't even inspect it, because then there's no real turning back on the inspection front. So, just know that, there are some options that you're going to need to think through when you go to make that offer. And then one thing that's kind of a new thing, right, is this current world that we're working in where sellers are really not supposed to be forced to pay a buyer's agent a commission, which was what a lot of the class action cases were about. And so in this case, really the parties are supposed to pay their own agents. But what we do find is sometimes buyers don't have an extra, 10 grand to pay their own agent. And so they have to negotiate that into the contract, asking the seller to pay it rather than working from the basis or assuming that it's going to automatically be done. If I'm on the seller side, I guess the tips that I would offer is, first and foremost, to look at the totality of the offer. I think so often people look at that first page and they say, hey, look, this offer is $7,000 more than the other one. But if you don't also look to see, is one for cash? Is one financed? Does one have an inspection contingency? One doesn't. Do I need to provide a home warranty to a buyer under one? And that's, $700. You kind of have to look at all of these things together. And only when you look at the totality of the offer do I think that you're in a really good spot to evaluate them. And if you're working with an agent, agents tend to be pretty good. I've sometimes seen agents like literally put these things in a matrix where, you see price, you see earnest money, you see closing date, you see inspection contingency, you see, do they need to sell their current house to buy the new one? And is that house under contract? Is it not? So these are the types of things that agents, I think, are really good at helping you sort through. But again, there's my general advice is to look at the totality of the offer and not just focus on the sale price alone. All right, so now we've got an accepted offer. Now that the offer is accepted, the seller and the buyer have agreed to terms. Most deals, a buyer is in fact going to do a home inspection. There is such a thing as an as-is deal, and the as-is deal could pertain to the representations and warranties that the seller's making about the house. They're telling you whether things work, or they're saying, you know what, we're not going to tell you anything about the condition. We're not guaranteeing that the dishwasher works. And I guess with regard to how you go about hiring an inspector, I would just suggest that, you do ask your lawyer or your broker if they have suggestions. I do think, of course, a home inspector should be licensed in Illinois. But I will say that over the course of my career, I've been more impressed with a certain group of home inspectors. And those are ones that belong to their national trade group, which is the American Society of Home Inspectors. If you were calling a home inspector, you could say, are you ASHI certified? And if you're ASHI certified, that would be a good clue, right? Why? I think there's some additional training that's required to be a member. And they also are bound by a code of ethics above and beyond what the license law in Illinois requires. So that would just be a tip that I'd have. Other inspections that you might do if you were a buyer, you would look for radon. So radon is a gas that's known to be carcinogenic. So in high doses, it can increase the risk of getting lung cancer. So typically, just by background, if a home's got a radon level above 4, most of the time, sellers are pretty eager to get the radon mitigated, predominantly because if they become aware that their home has a high level of radon, they're required to disclose that to subsequent buyers after you. So I would say more often than not, when a buyer comes back and says, hey, your house has got high radon, the seller will usually say, yep, I'll get it remediated next week, by putting in a ventilation system. Usually that's the mechanism. Or alternatively, they'll offer you a credit, which will help you pay for it post closing. Not very common in Cook County, but there are places in the Chicagoland area that still use well and septic. And if that's the case, typically there's an inspection done for that, right? They're testing the water to make sure that it's safe. Plumbing inspections, particularly sewer scopes, are becoming increasingly popular. What they're doing is they are literally putting a camera through a sewer line. And the reason that they're doing that is they're looking for any breaks in the line. Why? Because just based upon the age of our city's infrastructure and when homes were built, we're living in a moment where things are starting to corrode and wear down. And it can be very expensive if you have a problem with your sewer line. So that seems to be an increasingly common inspection that I would say even 5 or 10 years ago, I hardly ever saw, unless a home inspector had first identified, a slow drain or something along those lines. I think now people are more proactively looking at that. And then the last one I would mention would be the roof inspection. So if a home inspector comes out and says the age is wearing on the roof, or it's near the end of its life, sometimes we see buyers conducting additional inspections of a roof just to determine what's coming. All right, and then I know, right, I said all these things and I forgot to talk about hiring a lawyer, right? I would say this: you could also hire a lawyer at the beginning of the process. If you're a seller, when you're prepping your house, in an ideal world, you'd probably hire your lawyer then, because then the lawyer could help you navigate the listing agreement and the terms of the arrangement that you're going to sign with your broker. But practically, I know that that's not how this process usually works. The way that it usually goes is that the lawyer gets referred to a client sort of after they have a contract. And it usually happens at the direction of the brokers. What I would say is this: I think the best scenario is one where the lawyer is loyal to you, and not beholden to a broker for constant referrals. So if I could choose, I would say it's better if the lawyer is engaged directly and not just because of a broker. But if you don't know a lawyer, if you're not sure where to turn, you could call the Chicago Bar Association, who has a legal referral service, or you could look to the Illinois Real Estate Lawyers Association. They've got a membership directory which shows their members. And the reason I think paying to be a member of those associations matters, or you should consider that, is because these are usually the places that offer the best education to keep lawyers up to date on new laws or current trends or issues in the marketplace. So those would be resources that I could recommend. All right, and then again, buyers, we're post contract. You've hired your lawyer. You've done your home inspection. A buyer is obligated to get going almost immediately on obtaining their mortgage. So before you got your offer accepted, you probably did submit a pre-approval to the seller, just showing that somebody had looked at your finances and generally thinks that you're a good candidate to obtain financing. But now it's time to get serious. So you're going to need to commit to a lender. So, very quickly, you should shop around, look for current rates, but understand that it's not just about the rate. Any lender can give any buyer a certain rate. The question is at what cost? So you have to look at how much money are you going to need to put down, and then what the rate is, and then ultimately what that does to your payment and your own affordability. and when I say that, like, any lender can offer any rate, I mean, there's this thing called buying points, where you can essentially pay money up front to lower the interest rate. Um, and look, that works best in scenarios where you're likely to be in a home long term, or you think that rates aren't going to go down. Um, I don't think at this moment, based upon the high interest rate environment that we're in the spring of 2025, that probably makes a lot of sense, because I think more likely you're going to obtain financing now, and then you're going to need to refinance down the road when interest rates drop. The question is, how long is that going to take? And is this going to happen imminently? And depending upon the day and who you're talking to, that kind of determines what that outlook is. Um, and then I would just also say that it's, a good idea to just make sure that the loan officer is aware of any situation in your life which could lend to, an advantageous financing arrangement. If you're a veteran, tell your loan officer, right? Why? Because then you might be able to borrow 100% of the home's value and, have a lesser down payment at the time of closing. Well, when is that really helpful? Well, what if the house needs work, right? If you've got $20,000 in the bank and the house needs $20,000 of repairs, if you're using a normal lending arrangement that depletes all of your cash, then there's no money for the repairs. Using a VA loan, you then might have some money to do some work. So there are, of course, things that go along with getting a VA loan. There are condition issues that have to be satisfied. Same thing with FHA loans. But just make sure that you're exploring, the entire worldview. If you're a first responder, hopefully the loan officer is going to chime in really quickly and recognize that and identify if there's a program in the area in which you're buying. But if you've had those conversations earlier on in the process, right? If that was step one for you, you might even be buying in an area where bigger incentives exist, and you're already well versed on that. Okay, so you've now gotten your financing. Your mortgage is approved. Probably the day of, or possibly the day before, you're going to do a final walkthrough. That final walkthrough is your opportunity to confirm that the condition of the property hasn't changed, right? A tree didn't fall through the roof and now the roof is leaking. The condition isn't necessarily expected to be perfectly clean. What it is supposed to be is broom swept. So just know when you buy a house, you probably need to get in there and clean, or hire somebody to do so. It's also an opportunity to confirm that any repairs that were supposed to have been made were in fact done. In our office, when we're representing a buyer and there's a repair, we ask for invoices and proof that the work has been done prior, so that there's not really these last minute walkthrough issues. But it's a good opportunity to just make sure that everything that the seller said they would do was in fact done. Seller, when it comes time to prepare for the closing itself, sellers will typically pre-sign all of their documents. So you're going to sign your deed, your mortgage, or I'm sorry, your deed, your affidavit of title, your bill of sale, some of the key important transfer documents and warranties that you give to a buyer are usually done in advance. And worth noting that we are now living in a world where we do have electronic notarization in Illinois. So you could physically take papers to a notary and have them notarize your signature, or you can appear on a Zoom. Usually there's a fee for that, like $50. And you can get somebody to notarize all your documents, so you don't even have to leave your home to do that. And in the background, you'll need to also cooperate with your lawyer. You'll need to cooperate on, things like getting a mortgage payoff if you've got a lender. They're going to need your account information, your social security number, who the lender is, what the account number is, this sort of thing. And all of that's so that when we get to the closing table, every issue that you have as a seller has been addressed, and then you're able to deliver clear title to the buyer, which, by the way, is going to be the expectation that was set forth in the contract itself. If you're a buyer, right, on the day of closing, you're going to need to do two things. You're going to need to bring a government issued photo ID. You're going to need to also bring certified funds. So how do you bring certified funds? Well, if it's less than $50,000, you are able to either send a wire to the title company or you're able to get a bank check payable in certified funds. If it's $50,000 or more, though, know that you're going to be required to send a wire. And ideally, you would initiate that wire at least 2 business hours prior to closing, just so that there's not a likely delay in getting your funds to the title company. All right, and then closing the deal itself. Again, the seller's not usually at the table, but usually the seller's attorney is in communication with the title company. The title company is going to be sort of this intermediary party. So what's going to happen is the seller's going to come to the closing table with documents, right? The deed, the bill of sale. The buyer's going to come to the table with money, whether it's all of their own money or partially from the lender. And then there's going to be an exchange, right? The buyer is going to give the seller the money. The seller is going to give the buyer documents. The lawyers for each party are going to agree that everything is sufficient and good. And then at that point in time, the title company disperses the file. Worth noting, not only does a title company act as an intermediary or as an escrowee who's going to be that middleman, they also will issue insurance in the transaction, right? They're going to guarantee the buyer that in fact the seller was the proper seller, that the seller is giving you good and merchantable title. And if there were to be any issues, then there's somebody else who can help make you whole as a buyer after you've given this wrongdoer seller money. We don't see a lot of that, although there's increasingly more attempts at fraud, frankly, just because real estate transactions have big dollars attached to them. But you don't generally see complete or total title failures, but it is a possibility, and there's an insurance product issued by a title company that helps ensure that you don't end up with a loss. And then after you own it, right, just really important for a buyer, get your utilities set up, make any of those necessary repairs that maybe the seller was unwilling to make or you got a credit for, maintain the home. And then my last tip, which would take us right back to that June program for Law at the Library, is get an estate plan together. An estate plan can be complicated. I work in a firm where we do some very, very high-end advanced planning. But even a simple will with a simple living trust is a great move. And the reason is that if anything happens to you, particularly if you're a single person, if you've got all your properties in a trust, you can avoid the probate process, which can be time consuming and also expensive. Generally, it's cheaper to plan before you die than to die without a plan and then leave that to your heirs to resolve. So that would be my pitch. I'm not sure who the person is that's going to do the estate planning webinar, but if this was helpful and you wanted me to come back, I certainly would. I do think it's really important that we try to give people some free advice. And I know lawyers oftentimes aren't doing things for free. So with that said, I'm not sure that we have a ton of time for questions tonight, but I've got this QR code on my screen, and you can always call me for free advice, right? I may not be the lawyer that can solve your problem, but I'll always take the time to point you in the right direction of somebody who can. And like I said, the CBA also does have a legal referral service, and lawyers have been vetted to make sure that they're competent in the area in which you're calling them about. So if you get into a car accident, you need a personal injury lawyer. These lawyers are personal injury lawyers. If you need a real estate lawyer, these are real estate lawyers. But with that said, are there other questions that I might quickly answer, or should we just have people reach out to me directly? What do you think?
I didn't see any in the Q&A, so if we want to end there, I know you've got to run to another meeting, so that could be a good way to end it. Yeah, thank you very much. This was really informative, really interesting, and I'm glad that you were able to make it tonight. And thank you everyone for attending and sticking around. And I hope you got a lot out of it.
And you know what? I might just do one more thing. Maybe I'll
Yeah.
drop in the chat my like my LinkedIn. Oh, actually, well, I don't know how to easily cut that. Well, anyways, regardless, just reach out to me in any way that you can. If you want to connect on LinkedIn, that's fine. If you want to send me an email, whatever it is, I'll always help and at least get you to somebody who can assist.
All right. Thank you so much. I'm gonna stop.